Silver's price just dropped 5%, but here's the part no one is talking about. While New York's paper market is plummeting, over in Shanghai, buyers are paying $13 more for the exact same metal. That's right, the largest gap between East and West in modern history. So why does the price in the West look like it's in free fall while the East is paying a premium? The answer will blow your mind. This isn't just a market dip. It's a deliberate move by some of the biggest players in the game to keep a lid on something that's already slipping out of control. Stick with me, and I'll show you exactly why the price you're seeing is a smokescreen. What's happening behind the scenes is far more critical than you realize, and what's coming next could change everything. So let's break this down. While the silver price in New York was getting hammered, something strange was happening across the globe. In Shanghai, physical silver was trading at $100 per ounce, a $13 premium over the paper price. That's a massive discrepancy, one that doesn't just happen in a normal market. This is not just a blip. It's part of a larger pattern we've been seeing in commodities for years. So why isn't the gap closing? Normally, arbitrage should take care of this, but it's not. Why? Because there's no physical silver available in the West. If silver's so cheap in New York, why aren't traders moving metal across the globe? The answer is simple, and it's something the mainstream won't tell you. The paper price in the West is a lie, and the worst part, this whole situation is escalating, and it's coming to a head soon. Let me show you exactly what's going on behind the scenes and why this isn't just about silver, it's about global financial control. Here's where it gets really interesting. While silver's price is tumbling in New York, physical silver in Shanghai is trading at $100, and that's not a typo. $13 higher for the exact same metal. Now, I'm not just throwing out random numbers here. Let's talk about how this happened. Around 10:40 p.m. Eastern Time, someone dumped 2,000 contracts into the COMEX order book. That's 10 million ounces of paper silver. And they did it during the lowest liquidity window of the day. The result? A vertical crash from $92 to $87.59. But here's the part that should make your blood run cold. No one is talking about the timing. This wasn't a natural move. It was deliberate. Why dump contracts when no one's around to stop you? It's because the big players knew that with fewer market makers and almost no competition, they could force the price down with minimal effort. But here's the catch. While that happened, China was still paying $100. The gap is massive, and it tells you one thing, and this isn't about price, it's about control. And this, my friend, is just the beginning. Now let's zoom out a bit. What you're seeing isn't an isolated event. This is part of a much larger game being played by some of the world's biggest banks. The move we saw last night is just a small piece of a system that's starting to crack. Historically, silver has always been vulnerable to these kinds of moves, but what's different now is the sheer scale of the manipulation. When you see a $13 gap between the East and West, something fundamental is broken. This isn't the first time we've seen manipulation in silver, but it's never been this obvious, this urgent. The price is getting pushed down on paper, but the real demand is coming from physical markets where there's just no metal left. You'd expect an arbitrage opportunity like this to close quickly, but it's not. The gap is widening. And here's the kicker. This is all happening in the middle of a global crisis where financial institutions are scrambling to secure their assets. Silver is becoming a store of value, not just a commodity, and that's what the powers that be are desperate to control. This market is no longer just a price fight, it's a battle for the future of global finance. Let me show you something that will make it crystal clear. The contradictions between the paper price and physical silver are deeper than you think. While New York's paper market is taking a beating, China's demand is intensifying. The Shanghai premium isn't just a small fluctuation, it's a clear market dislocation. If the price in New York was real, the spread would be closing by now, but it's not. Instead, we're seeing zero action from the arbitrage players who would normally close the gap. Why? Because the physical metal isn't available in the West. In fact, it's disappearing. The vaults are empty, and any physical silver that does come into the market is being hoarded by buyers in the East. Meanwhile, Western paper traders are holding contracts for metal they can't get their hands on. That's where things get dangerous. You have to ask yourself, if silver is really $87, why aren't buyers rushing to take delivery? The truth is, this price doesn't reflect reality. And here's why this is a game changer. The longer this gap persists, the more pressure builds on the shorts. The next move is already in play, and it's not what the banks are hoping for. Now, things are escalating quickly. In the last few hours, we've seen two major developments that are stacking pressure on the system. First, the backwardation in silver is intensifying. Spot silver is trading 30 cents higher than the futures contracts, a signal that the market is demanding immediate delivery. This isn't just a technical signal. It's a warning shot that the system can't keep up with demand. The market is telling us we need metal now, not in the future. Second, the Shanghai premium is staying elevated, not dropping, but widening. Eastern buyers are paying more, and they're willing to wait longer for delivery. So where does that leave the West? It leaves them with paper contracts they can't fulfill and a desperate attempt to push the price down to avoid total collapse. The system is being strained at every level, and if this continues, we're staring at a full-blown market crisis. What happens next could change everything. Now let's zoom in. This isn't just about traders and banks. This is affecting real people, and that includes you. When physical silver gets hoarded and the price discrepancies widen, it's not just numbers on a screen. It's affecting supply chains, investment opportunities, and the ability for everyday people to secure their assets. If you're someone who's been stacking silver or trading futures, this hits home. You're seeing the system start to break down, and it's not going to fix itself. If you've ever felt like you were getting the short end of the stick when it comes to getting real value for your investments, you're not alone. Physical silver is disappearing, and the prices on the market are being manipulated to keep you from getting your hands on it. And the worst part? The longer this goes on, the harder it's going to be to get back in when the price finally reflects the real value. If you've been watching this unfold and it feels like something's off, you're not imagining it. If this feels familiar, say so in the comments. We need to talk about what's happening next. Let's step back and look at the bigger picture here. This isn't just a silver problem. It's a systemic issue with the way markets work today. The backwardation we're seeing in silver is a red flag, but it's also a sign of something deeper. When markets are pushed to this point, it's often because the system is being manipulated by those with the power to control it. The banks, the institutions, the big players, they are leveraging the system to keep the game going, but the cracks are starting to show. What we're witnessing is a battle between paper markets and physical markets, and right now the paper market is losing. The reality is these powerful players are too invested in keeping the price under control, but the demand for physical metal is real, and no amount of market manipulation is going to stop that. At some point, these paper contracts will become worthless, and when that happens, the floodgates open. What we're seeing now is the calm before the storm. The question is, how long can this game go on before it collapses under its own weight? So what happens next? We're at a critical juncture in silver's story, and there are two paths ahead. The first possibility is that the banks continue their efforts to suppress the price and maintain control. If they succeed in keeping silver below $80 by Friday, they might buy themselves more time to shore up their positions. But here's the thing, that's not a permanent solution. The physical market is still demanding delivery, and the backwardation tells us the pressure is only building. If the price closes above $80, expect extreme volatility as the shorts are forced to cover, and a gamma squeeze could push prices higher faster than anyone is prepared for. On the other hand, if this manipulation holds and silver stays suppressed, the discrepancy between paper and physical silver will continue to widen, and eventually it will force a reckoning. The truth will come out, and when it does, prices will explode. It's not a matter of if anymore, it's a matter of when. This is where it all comes together. The price of silver is not what it seems. What we're seeing on the paper markets is fading fast. It's a facade holding back the inevitable. The real story is in the physical market, where the pressure is real and growing. The vaults are emptying, the backwardation is signaling that the system is losing trust, and the East is moving in to take control. The question isn't whether this will end, it's when. When the paper market collapses, and it will, those who have secured physical silver will be in a much stronger position. So here's my question to you. Will you be ready when the tide turns? If you're still on the sidelines, now is the time to watch closely, because the game is about to change. For more insights on what's coming next and how to navigate the storm, make sure you're subscribed. You won't want to miss the next move.